the informed investor, thanks to Century 21 agents, defying mediocrity and delivering extraordinary experiences.
Lucky enough to be joined every Monday night by the chairman of Century 21, Mr. Charles Tarby. Good evening to you.
Yeah, good evening, Steve.
Sydney cracked an interesting figure at the weekend. The clearance rate was higher than this time last year.
Yeah, look, I heard a bit of conversation earlier on radio, and they were talking about the fact that it did, but the numbers were down. And I think that needs a real explanation, because a lot of people are not really explaining why the volumes of auctions are down. I mean, when the market's booming, everybody wants to go to auction because it's an unknown factor. So what's happening is a lot of properties have moved from auction back to private treaty. And in fact, we have 8.9% more properties available overall across the country than we had this time last year. So when people are saying, oh, the numbers are low in auctions, they may be, but they're very, very high in comparison to last year.
Melbourne didn't fare quite so well. Brisbane, though, was back in front again.
Yeah, it's good to see. Look, I think there's a lot more confidence out there. So it's really strange. The more and more negative talk that you're hearing about or reading about the market going to drop, significant percentages, we've had an incredible number of buyers out because everybody thinks they're going to get a bargain. So there's a little bit more action in the market because of people think that they're going to benefit from this crash that everybody keeps talking about. The best thing I heard today and yesterday was Moody's coming out saying prices will drop in Sydney and Melbourne between 9 and 11% over the next 12 months. So that's actually good news compared to the up to 50% somebody was claiming just a couple of weeks ago.
I guess people are trying to pick the bottom of the market. That's always what they try and do.
Yeah, it's very hard, but there's not a lot of great advice out there because it's incredibly confusing. If you hear somebody saying, oh, it's going to drop 20%, the next week somebody says it's going to go 50%, and then you hear the talk about 280 billion has been lost in real estate values, but they're still not giving the positive side. And although the positive side is not something we talk about all the time, it is fair to say that the majority of people over the last 5 years have made a significant amount of money by owning real estate. And those people that sold their properties 2 and 3 and 4 years ago, when the property experts started talking about a market crash, they've lost a significant amount of gain.
Let's talk about apartments because, you have your eye on the apartment market better than most people, and there has been warnings in particularly Brisbane and Melbourne and also to a degree Sydney about a glut of apartments. We're now told, this story in the Australian today by their property reporter Ben Wilmot, that Mirvac, Stockland and Lendlease, they say, look, we're okay, we're able to sell what we need to sell. But some of the smaller developers, Charles, have got a bit of a problem.
They have, and they have had for a little while. This has been looming for a couple of years, and I think a few of them really started to feel it about a year ago. We started seeing smaller development sites coming on the market, and these were sites that were ready to go. They had some pre-sales, but they weren't getting significant enough pre-sales for a bank to finance them. And, of course, the banks tightened up their financing. They tightened up their valuations, even though they're still admitting that they haven't changed their lending policies. And a lot of these smaller developers just can't get it off the ground. I was talking to one young developer the other day who has only a small number of apartments or townhouses, a dozen of them, and he needs to sell a certain number before he can even start building. And he said to me recently the banks changed the policy on him. Instead of saying you need to sell 50%, they're now saying to him you need to sell 60%. So the way the market has changed has had a lot to do with the Royal Commission into banking. So a lot of these developers are being caught right at the tail end of this problem.
Is that a byproduct also in part of the Royal Commission into the banks?
Absolutely, he is. I was speaking to a banker today, remain nameless, a good friend of mine. I said, you guys you're talking about the fact you haven't changed things, but you have. And he said, well, yes, we have. We're not lending now based on equity. We need to know you can afford to repay. So the entrepreneurship has gone out of it. I can't go and buy a property because I have equity unless I can demonstrate an ability to repay. So there's a whole range of things that have changed, but the valuations are now kicking in, or the lower valuations are now kicking in because the banks are putting pressure there. So until that changes, negative gearing talk, removal of negative gearing talk is a factor. Elections are a factor. But the biggest factor we've had that's changed the way our industry looks today is the Royal Commission into Banking.
You got a feel, Charles, for those people who brought the properties in the Opal Tower. Half of them have still not been able to move back in there. There's no way, if you own one of those apartments, you're going to ever be able to sell it, right?
It's a scary thing, and the developers are not developers that are new to this. They're very strong developers and they've got a very good reputation. Yeah, it's a shame. I understand it was to do with construction and design. I read today even about some people who claim they haven't been paid. They've moved out. They've got to go and rent somewhere else. It's a massive, massive cost for this developer, and scary too, Steve. I mean, even if they do build it correctly or reinforce it correctly, I don't know whether you're going to rush down and buy an apartment there yourself, because
No way.
I'd be frightened to do the same. And unfortunately, these people have brought this publicity on. The people who occupy the properties have really created a rod for their own backs.
I'm not even sure, Charles, I'd be happy to rent there.
Yeah, I know. There's a lot of people who do, and they've had to move out and find other accommodation. Look, Steve, that one's going to be problematic for some time, but luckily it's not indicative of the construction in this great country that we have compared to other countries around the world.
Well, let's hope not. 169 of those apartments out of 392, that's 43%, still unable to be occupied. I mean, that is a big problem.
So they say that developers make a lot of money, Steve, but they also have a lot of problems at the same time.
They do indeed. Charles, always a pleasure to catch up with you, mate. I'll talk to you, my friend, this time next week.
Look forward to it, Steve.
Charles Tarby there from Century 21. The owners of the Opal Park Tower, by the way, have struck some sort of deal with the parent company to extend the warranty on those apartments. But as I said, I mean, would you really either want to rent or ever buy one of those properties in the Opal Tower? If you're stuck with one, you'd be in a hell of a trouble.